Hey guys, Matt here. So in this week's portfolio update, I'm going to lay out my updated investment strategy. So this is my portfolio. It is a mix of growth stocks and dividend stocks and value stocks and stuff like that. I don't adhere to one style. Right now, my portfolio, my goal is just to make money. My yearly goal right now is to get this portfolio from where it is now to $25,000 by the end of the year, no matter what happens in the market. And as you can see, I am almost there. Today, I deposited my monthly $1,200 into the market. Bank of America, we are down 1.08%. Cloudera, we are up 2.47%. Cisco, down 9.04%. Facebook, up 43.96%. Intel, up 2.67%. Stocks finally looking good. Realty, up 23.27%. Pfizer, up 9.84%. Qualcomm, up 48.10%. Revolve, up 20.13%. Sony, up 8.49%. AT&T, down 4.31%. Tapestry, up 15.88%. Tesla, up 5.91%. And Uber, we are up 33.64%. That gives me a total equity of $23,568.28. And we are currently up 12.20%. So let's go over the first change I want to make to my investment strategy. So normally what I do is I deposit $1,200 every single month into my Fidelity money market. And then from there, I would deposit $200 from my cash into a dividend-paying stock. However, I don't know if that's the best way to grow my portfolio. I know dividend-paying stocks are great and all, but it's really slow to get started. Like, let me show you something. So looking at my dividend tracker, if I rely on dividends as my primary driver to grow my portfolio, if I do nothing from now to 1 year from now, I will make $451. And that's pretty good for dividends so far. I'm getting there. However, I mean, I'm making that alone just from Facebook. Although I really want to continue focusing, I want to continue growing my dividends over time. I think it might be a better strategy to start focusing more on hoarding cash and taking advantage of dips in the market. Now, I still want to deposit some money into my dividend stocks from time to time, especially when they're low, like Cisco and AT&T. But I kind of want to shift my focus into just growing my my cash reserves and then taking advantage of stuff in the market. I'm gonna hold off on the weekly $200 unless it's going to go into my second strategy, which we're gonna get into right now. My second strategy update is gonna deal with some individual stocks. There is some stocks I'm planning on selling now or in the near future, and then there may be some changes as to the current stocks I own. If I don't mention the stock, just assume I'm holding and nothing special is going on. So the first stock I want to mention is Uber. I want to talk about Uber. And if you've been watching my previous videos, you know I've been inching towards selling Uber once it hits the $40 or $41 or something like that. I still believe in that theory. Because although I believe in Uber for the long run, I'm a value investor, except for Tesla, which we'll get into after this. Except for Tesla, I try to invest in stocks that are undervalued. At the time I invested in Uber, if we look at my purchase history, I got into Uber back when it was $29.96, just under $30. And I thought it was undervalued, and I kept riding the wave down. Now, Uber, its profitability calendar has been, pushed back, and it's through not much fault of its own, since we're going through a pandemic and their rideshare is dependent on an active market. It's still not profitable, and it's not going to be for a while. But the stock price keeps going up. And all the way until Monday of this week, I was planning on selling at 40 or 41. Now I'm not so sure. There's been some news. For example, on Monday, London just reinstated its Uber's license to operate for the next 18 months. So that is a whole avenue of business that just opened up for the business, and that's going to stay there for at least the next year and a half. And very recently, today, I'm filming this on Wednesday, they're looking to kill the law that California passed to against app-based drivers and classifying them as employees and all that stuff. Now that happened, though, I'm starting to rethink this. I don't know if I'm tempted to hold on to Uber and ride them out. However, like they still have a very bumpy year, at least a year or two ahead. And I still think the stock is overvalued. Despite this turmoil, I am 90% sure I'm going to sell Uber once it hits 40 or 41. At that point, it's getting a little too pricey for me, and I may start taking some profits around then. As far as Tesla, I made a mistake with Tesla. Now, I still believe in the company long term. However, I made a video a long time ago talking about Tesla, which I said if it drops below 500 or 600, I would start being interested in that. And when the stock price hit, it dropped below that. Now, that assumption I made those months ago was based on a PE versus EPS analyst estimates. And what I failed to take into account is that when the stock split hit, the EPS also divided by 5. So, in other words, I fucked up, and I bought Tesla way too high of a price. As a result of that, I mean, it's kind of too late now, so there's nothing I can do except for hold on to it. Now, I don't plan on buying more Tesla unless it goes to a comparable level, 300 below, whatever. I shouldn't even buy that high, but it is what it is. Another stock I'm planning on selling is Sony. Now, there's nothing wrong with the company. There's nothing I have against Sony or the business model or anything like that. It's just a foreign stock, and there's nothing wrong with the fact that it's a foreign stock, but because it is, I have to pay taxes and all the dividends and stuff, and it's not that much of a hassle, but I don't want to deal with it anymore. So I'm going to wait until the end of the year, I think when the PS5 comes out, and then I'm gonna see if that, gives the stock price a bump, and then I'm going to sell out. What that means is that once I sell out of Uber and I sell out of Sony, I am going to be on the prowl for at least one new stock position. So you can expect some more will I buy X next stock video as I go through the position. I'm very tech heavy as far as my positions, and I know that because, I specialize in tech, and that's just what I know the best. However, I want to diversify a little bit away from tech, so once I sell Sony and Uber, I'm going to gravitate towards a new position. I'm going to add a new position that has nothing to do with tech. I don't know what that's going to be, but we'll find out. Now, also, one thing I want to do is, while still holding cash, so this will be a gradual process, I want to get my Cisco shares, my AT&T shares, my Tapestry shares, and maybe my Bank of America shares. I want to get to at least 100 shares in each of these positions. The reason why is sort of a segue into the third strategy. So the third update to my strategy is that I want to get into selling covered call options. Now, don't worry, I am not going to get into the buying options game. I'm not going to buy calls. I'm not going to buy puts. I'm not going to deal with any of that shit. However, there may be some benefit in actually selling covered call options in certain scenarios. I just got approved last week, but I haven't done anything yet. Basically, covered call options will give me the chance to make a little bit of premium updates, a premium cash week by week on stocks that I'm planning to sell in the near future. While I go through my strategy, I'm going to briefly walk through what selling a covered call is. However, my boy Think Money released a whole ass video going all in the depth on what selling covered calls are and how to do it. So if you want a more in-depth analysis on that, go ahead and watch this video, but maybe after you watch my video first. I'll put a link to Think Money's video in the description below. With selling a covered call, what that is I'm going to give someone the right, but not the obligation, to buy 100 shares of my stock at a certain price for a certain expiration date. Now, let me explain. One covered call contract consists of 100 shares. So let's take Cloudera for example. If I wanted to sell an options contract, and now because the reason why it's a covered call is because I already have the 100 shares. So basically what this is I am selling someone who buys this the right to buy 100 shares of Cloudera if it hits the strike price of $11.50 before October the 9th. In order for someone to buy an options contract from me, they have to pay what's called a premium. And the premiums are these guys here. So let's say I select this, and a premium of 8 cents. Now that 8 cents is per share. So one contract will consist of this number times 100. So if someone wants to buy an options contract for me, to buy 100 shares at a specific price, they're going to need to pay $8 if I pull the trigger on this. And when that happens, I will gain $8. Now that's not a huge amount in the grand scheme of things, but one share of Cloudera is $10.89. So if I sell this contract and someone buys it, I get that money and I keep it no matter what happens. And if the stock price never reaches $11.50 before October the 9th, I get to keep the shares and I get to keep the $8. Now, if the stock price reaches and hits $11.50 exactly, that might be a situation, but I'm probably safe because remember, the buyer paid a premium of 8 cents. So the buyer is not going to break even unless it hits the strike price plus the premium. Only then, well, I mean, they break even, and that's just breaking even. It would need to go above that for them to be in the money enough for it to make sense to sell the option. But once it goes above that, they can either exercise it or they can sell it back to the market. But for the seller of the contract, if it goes above, I mean, you are probably going to get a sign, and that's what they call it. And once that happens, I have to sell the shares at this price. Oh, and one other thing is every time I make these $8, you're never going to see it here. But every time I make this $8 as for the premium, my cost basis is going to go down by that amount every single time. Now, as far as my strategy goes, in order for this to be profitable, I either need to be up on a position or I need to set a price that I am damn sure the stock is not going to hit in time. And in this market, I'm not damn sure of anything. As far as my preliminary strategy goes, in order for this to be profitable, at least right now, and for me to be safe, I need to be up in the position and ready to sell it. I'm pretty long on Cloudera for the next couple of years. That's sort of a yearly 3 to 5 year strategy. So I'm not ready to write any contracts for this position. AT&T, not yet, but Cisco. Now these could be candidates down the line once I get the 100 shares and these stocks go profitable, and I want to get out of the dividends game. These could be the candidates, but that's going to take some time. Now, one stock I am interested in doing this for is Tapestry. I'm already at 85 shares. If I buy 15 more shares, maybe this price goes a little lower, I could see myself writing some contracts on that at the right strike price. I mean, I'd like to hold on to Tapestry for a couple more years, but I am not totally against the idea of selling the shares. But we'll see about that. First things first is I want to get some of these positions to 100 shares, and then we'll worry about how to get that done. Hey guys, Editing Matt here. So one thing I want to add to this is that, yeah, I'm obviously very new to options, so I don't have a whole lot of experience, so I'm still formulating a strategy. But the benefit of writing these covered calls is that I do them over and over on a stock that I'm ready to sell. And so every week I'm collecting the $8 in premium. Every week I'm collecting the $18 in premium, or however much the premium charges. And I've seen them go higher than that for some of the more expensive stocks. And I keep doing that over and over until I get popped, and then I can sell the stock and then make the money from selling the stock. And the only downside, of course, is that I miss out on any future gains if the stock price continues to go up. But those are just some updates to my investment strategies. What do you guys think? Do you think I should do things a little differently? Do you have stocks that I should be looking at? If you have stocks I should be looking at, let me know in the comments, and if I find them interesting, I'll make a video on it. But anyways, I hope you enjoyed this video. Have a great day, and eat your vegetables.